Hi guys, welcome back to my channel. Kelvin here. So for today's video, I have a special guest. His name is Boon Tee. Welcome Boon Tee.
Thanks, Kelvin, for having me.
Hi, thanks for coming over. Can you give a quick intro about yourself?
Hello, my name is Boon Tee. I've been in financial industry for 12 years now, and I'm very passionate about investing. And I'm also a fan of Kelvin's channel as well.
Oh, thanks. You were one of the earlier subscribers, right?
Maybe not the earliest subscriber, but at least I've been listening to your video for like maybe few years already, I think.
Oh, thanks.
Yeah.
So I saw that you have a YouTube channel that talks about investing also. How will you rate your investing skills?
Yes, I do have a channel, but it is still very small channel now. I started since end of last year. And in terms of the investment knowledge, I would say I would rate myself, let's say, just slightly above average, let's say like 6 out of 10, because I've been in the financial industry. And this is something that I'm very passionate about, and I talk a lot with my friends on such topics.
I think 6 out of 10 is already higher than mine. Mine is just 4 out of 10.
Yours is definitely not 4 out of 10. Yours is very high.
No. So the reasons I invited Boon Tee over today is to discuss about options investing. So you have quite a lot of experience in options investing too, right?
I won't say I have a lot of experience. I mean, just for a background, my YouTube channel is mainly about long-term investing. So that means investing in stocks for the long term, looking for companies that can compound over years. And my preference is always invest in companies with a higher growth rate, because I think that those companies are companies that are doing strategy right. So back to the options topic. This to me is not my core strategy, but it is just something to help increase my return slightly. That's my only goal.
How long have you been doing options?
I've been trading options for a couple of years now, but before I actually traded options, I have studied this topic before, at least on the theory part. So I know a bit on the strategies now.
So a few years more is actually more than me. I just started last year.
But that's quite strange actually, because I remember when I was still playing with my options strategy, I actually consulted you a lot. So I actually learned from you.
Serious. So currently, what options strategy are you using right now?
For now, again, I just have to stress again, this is not my core strategy. It's just like a small portions of my strategy. But the strategy that I'm mainly using now is writing put options, meaning that essentially it is just like selling insurance such that the stock will not fall to certain level. So if the stocks remain stable, then I can earn just some monies. But let's say if there's a sharp drop in the share price, then I think it will be a huge loss as well.
It's not really a loss, right? Because you still have to buy the stock that you like.
Yes. So back to the selling put option strategy. I think there are many ways to do it, right? So it really depends on the strategy, right? Because there are people who use it as a cash secured put, meaning that you already have set aside a cash just in case if the stock price drop below the strike, you are already willing to buy it at the price. But for my strategy, because I'm mostly invested in stocks already, so I don't have that much of a cash that's sitting around just waiting to buy the stocks. So it is naked put options. So it is a bit more risky if we just look at it as a naked put, because whenever the share price drop, I don't have cash to buy in, and I might need to close the position at a loss.
So overall, was it a loss or a gain?
I have not kept track that closely, but I think it should be a gain for now.
Nice. Stonks. Yes. So other than naked put, do you do naked call?
Naked call, I would say no. I have done that before. It's just that it's not my like a strategy that I implement consistently, because I think naked call, right, maximum loss is unlimited. So you really have to think twice before you do this strategy.
So which stock are you personally selling puts on?
For now, I can disclose that I have sold put options of Tesla, because based on their deliveries numbers, right, I think it's good. And then the implied vol for Tesla also quite high. So I think by setting a very low strike price, I can get a decent returns, let's say like a couple $100s per week. So that's why I'm doing that on Tesla. I think for selling put options, right, you really want to choose companies that have high implied vol, because you want to get a decent returns, right? But at the same time, need to be careful that these stocks with high implied volatility, usually they could fluctuate a lot. So really have to careful on don't take on too much risk now. I think the risk exposure or the risk management part is very important.
So I think one of the advice is to sell options on stocks that you like. Do you really like the stocks that you sell options on?
Yes, definitely. So I think because selling put options is also one form of leverage. So what happens with leverage is that if the share price drop, and if you are still bullish on the companies, I think emotionally you are feeling much more better as compared to you just sell option on a company that you don't know at all, right? So that will be a very
like AMC.
Like AMC, yes.
Options actually seems like a very good way to generate consistent income. But what are the actual risks of selling an option?
I think that's a very good question. But I think for options, right, it is just a tool. That means how much risk that we are taking actually depends on how you structured the options. Because for options, we can long and we can short the options. And then there are call options, there are put options. So it's really depending on how you structure them all together. So for example, like if you look at the just now we talked about Tesla. Tesla price is around $860 right now. So let's say if you just sell a put option at, let's say, $850, right? And suddenly there is a huge drop in the price, and then you are actually leveraging, and the loss will magnify now. So I think this is the loss that people might not see as long as the share price remains stable, because it can remain stable until it suddenly just drops drastically, right? So that need to take that into consideration.
I think actually if you cover your options with cash or margin, and if you like the stock, actually I feel that the risk is very minimal.
Yes, I do agree. If it is cash secured put options that you are writing, then you either earn the premiums while the share price just run up, or you can get to buy the stocks that you like at the price that you set, right? So that's why people may say this is a very safe strategy.
But I think on the other hand, if you do naked call, the risk is actually much bigger, right?
Yes.
Because you can't really cover it with anything if you don't have any stock. So have you sold any naked call on any meme stocks?
Yes, but I think this is mainly for excitement rather than a consistent investment strategy. I still remember when the meme stocks are shooting very high and the implied vol for call is very high. So I did short the call options just to get that additional premiums. Luckily, I didn't make losses on that trade, but I don't think that is a very good idea.
Were you able to sleep well at night?
As long as the strike price is high enough for the call options, let's say like AMC is traded at $60 or $70 and my strike is, let's say, like $200, right? I still can sleep. But I still remember the episode when the share price just keep going up like drastically. I'm also a bit panicked at that time now. I remember I shared with you also.
So there's also the emotional thing that you have to consider when selling options.
Yes, definitely. I think investment strategy, one thing that is important is to be able to sleep now, because no money is worth the sleep time.
Yeah, correct. Just now you mentioned that options is just a very small part of your portfolio. Why not do 100% on options?
I think for stocks, right, it's just a very vanilla type of strategy. You are bullish on the company, you just buy the stocks and you just hold it for the long term. But when it comes to options, it's not only that you need to be right on the direction, so you are bullish, the share price have to go up, right? And then at the same time, you need to be right within a specific time period, for example, like before the maturity. So take an example, if you long a company's call options and you buy a call option with maturity of, let's say, 1 month, right? So the share price must go up within that 1 month period in order to you have any gains. For stocks, right, you don't have the time period. You can just sit on it for years and years and wait until the thesis play out, right?
So options is a good way to earn, but you still have to be right about the timing to earn.
Yes. That's why I think that options is mainly for short-term strategy. If you have certain catalysts or certain expectation on the share price within short period of time, and options is a good way to leverage up and also get some yield depending on the strategy.
Do you know about the LEAPS strategy?
Yes. I think before that we might need to explain a bit on what is LEAPS. So LEAPS is basically call options that is very long, like for example like 1 year call options. So I think LIPS is a very good way to achieve a leverage because you can see that, for example, if you don't have enough money to buy 100 shares, right, you can just buy one contract and that gives you 100 shares of exposure. So that is a very, very good way to get the exposure.
Do you use it?
No, I don't. Because I would prefer to dollar cost averaging instead of like just one trade and get 100 shares of exposures, right? I prefer to buy like 3 shares, 5 shares at a time.
For the next part, I have some viewers' question. One of you asked, after selling a money put, the market goes extremely in the money in that period. Which is the better option to make? You hedge the position immediately by doing a short straddle, or you wait until time decay and roll the option.
Okay, I'll first talk about my preference first. So because just now in the earlier section, we talked about like selling put options, out of money put option generate the income, right? So because the strategy or the approach that I'm using now is naked put, so I don't have the intention to take delivery on the share. What happened is that if the share price drop significantly, I will already roll forward to another put options with a lower strike price. So what it means is that if eventually I need to take delivery in the case of share price continue to go down, and at least it is at a much lower cost base.
I think it's the same for me too. I prefer to roll the option so that I don't have to take the losses immediately, because the longer I can delay it, the lower chance I will be getting a sign.
So I want to ask you, right, have this actually happened before, and what is your past experience?
So for my past experience, right at the start, right, I didn't know about rolling. I closed at a loss when stock goes against me. But now that I know about rolling, right, it's basically to roll forward by 1 month. So I delay the assignment by 1 month. What I found that was stocks that generally shoot up or go down, they will have a stabilization period. So rolling will bring forward to around that period. So around that period, then I can quickly close it off without any huge losses. Or even close it off at a gain.
So far, this experience that you had, you haven't made losses, right? I mean, it recovered later on.
Recently, I don't have any losses already because of this rolling strategy. And after selling options for 1 year, I roughly know what are the strike price to choose from. Hopefully, hopefully this strategy will continue to do well. Another question is, how many options trade to bring in consistent income?
Okay, I think for these questions, right, if we sell a put options on a company and we set a strike price that is very low, and then I would say that most likely the option will expire worthless and you get to keep the premiums. And you can say that this strategy can give you a kind of very consistent income, a very low income, but it is consistent. But I just want to caution that if you are running this strategy long enough, right, there will be period that the share price might drop drastically and you might have a huge loss. So what I mean is that, let's say if you're running this and get a profit of few $100s every week consistently, then when the loss come, right, it can come at the magnitude of few thousands, right? So you can't really treat this as a sure win kind of investment, because you need to know that the potential losses is higher than the premium that we receive.
Yeah, usually one big loss will wipe off your past maybe 10, 20 trades. To add on, personally, I have been doing this for 1 year, as I mentioned. I found that a consistent return per week is around 0.5% to 1%, but to be safe is 0.5%. So on average, right, if you can do this consistently over 1 year, you will get about 25% return on a good market. On a good market.
But have that offset the losses already? Like, is this the total already?
Yeah, this is the total right now. But I feel that right now, this year has been a good year. I am not sure whether going forward, is this still a good strategy or not. Yeah. So like as Boon Tee mentioned, it's one big drop will wipe off your losses. So it may or may not be a consistent way to generate income. Okay, the next question. Selling money put, options are in the money now. Is it better to roll at expiry, or is it better to take assignment so that you can start selling call options?
To answer these questions, right, you really need to understand the options diagram, the options payoff diagram. So what it means is that if you actually roll forward the sell put options, right, versus a long stocks and sell the call options, if you set the strike price correctly, actually the payoff is the same. And then in that scenario, right, I would say that they are indifferent.
So to you, it's actually no difference lah, whether to roll or to take assignment.
Yes, given the same strike price, I would say they are mathematically the same.
For me personally, right, I think it depends on whether I like the stock or not. Let's say if it's AMC, then I would prefer not to get assigned. I would try to roll it as much as possible. But let's say if it's like something like Tesla, if I have the money to hold it, right, then I think I will start selling calls on it. So it depends on whether you like the stock or not.
Yeah. I think just now I explained that the call and put, they are essentially the same depending on how you structure it that. But I think the interesting part is actually when you sell the call options, you don't really have to sell at the strike price that is exactly the same as the put. You can actually sell the call options with the strike price that is slightly higher, so that let's say if the share price rebounds sharply, right, and then you can actually keep some profit as well. So there are many ways to play it. It just depends on your short-term outlook at the time, and you can just structure it accordingly.
I think there's no real answer to tell. You just have to try it out for over a few months, then you'll roughly know what are your preferences lah.
Yes, experience.
Another question I have is when to close an options position. For example, you sell 1 month put. When do you normally close the option, or do you close it at all?
Okay, I'll come back to the example that we say earlier, right? Let's say if you are selling a put options that is out money, so as long as the share price remains stable, the put option will actually decay over time. So until it decays until certain level, it is very low already, and that means keep holding it. The yield will be quite low, right? So at that point, for myself, I will consider close the options and maybe just roll to another new options with a higher value, so that I can actually generate more returns out of it.
How do you decide when to close? Like let's say the options is $100 premium, maybe now it's $50. Will you close it?
Maybe 50% not enough. Let's say if it start with 100, maybe it drop to 30, and I might close it.
Around 30% lah.
Yes.
For me, right at the start, I just let it expire. But after a while, I realized that for options, it's better to close early because first you want to take profit. And when you normally go to sleep, the stock may go very weird lah. So it's better to close. So I will sometimes close at, if it's left with maybe 5 to 10% remaining value, I will close it immediately, then I will sell a new options depending on anything is happening next week or not lah. Like let's say if the earnings week is next week, then I will not sell it first. I will see what will happen before I sell lah. Another question is, what are the recommended stocks for selling options on?
Okay, this is a bit hard because I would say that you really need to sell put options on the company that you are bullish on, because when the shit hits the fans, you want to have a put options on the company that you like anyway. So this is very important. And second thing, you might want to look for companies with high implied volatility, because anyway you are exposed to a huge downside risk, right? You don't want to expose to the risk at the same time not getting enough compensations. So to be specific, I will avoid companies that is very stable. For example, companies like Apple, Facebook. These are companies that with very low implied volatility. I will avoid that. I might actually go for companies with higher implied volatility, like Tesla that we mentioned.
Any stocks below $40 that you like right now?
I think this one depends, because sometimes the implied volatility also change from time to time. But I can share that for now, at least for this week, I have put options on Futu, which is a Mumu brokerage, right? So I have put options on that.
Personally, for me, the stock below $40 is Palantir and Riot lah. But the problem with Palantir is that I don't understand their company. And for Riot, it's too linked to the price of Bitcoin.
Yes.
So actually, both are super volatile lah. So in the end, you still have to see what stocks you personally like lah. Not what stocks we like lah.
Yes.
Yeah. Before we end, do you have any questions for me?
Actually, yes. Actually, I want to ask, okay, for your followers who have been watching your YouTubes, learning to do option strategy and try to implement the real strategies that you taught on the YouTubes, right? Do you have any advice for them, or any ideas or advice?
You have to tap the like and subscribe button. Okay, just kidding. I think the most important thing is you have to do it on the stocks that you like. Let's say if you like AMC or whatever, then you could do it on AMC. But if you don't like, it's better not to do, because like Boon Tee said, sleep is more important than earning money lah. I think that's the biggest takeaway from all this. What about you? Do you have any advice for them?
My advice is I will go back to my own investment philosophy, right? So option strategy is a good way to generate income if you know what you are doing. That's for sure. But I think for long-term sustainable strategy, I will still encourage your audience to actually invest for something that is sustainable and long-term in nature. So try to look for companies that you think you are very bullish on for the next 5 to 10 years. And just invest in the shares instead of the options, because we might want to balance between the short-term and long-term strategy. And over the long term, I think most of the returns will still come from the long-term strategy.
Yeah, I agree on that. Stocks first and options as the supplementary. Okay, we have come to the end of this interview. Thanks Boon Tee for joining us.
Thanks for having me.
You can subscribe to Boon Tee on his channel. I will leave his link to the channel down in the description below. Once again, thanks for joining us. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.
Bye-bye.
Bye.